Can you see my screen now?
Yes, we can see it now, sir.
Consolidated statement of financial position. Let's go to the question. As at what? As at 30 September, I think. Don't forget, we don't consolidate associates. We only show investment in associates. We don't consolidate associates. We only show investment in associates. Then I will go to the question to determine what type of investment do we have. I will know. How do I know? Based on the shares he acquired. The same way you have known for subsidiary is the same way you also know for the associates. Based on this other question, let's read. Question 2. Oh, it's not question 2. Question 3. Let's determine the type of investment. Either a public sector company acquired the following investments: 72 million shares in Salvador. What is type of investment does he have in Salvador? I will go and check. What is the shares in Salvador? Ordinary shares in Salvador is 120. 72 divided by 120. That will give me how many percentage? 60%. That is a subsidiary in exam. That's what I will now go to information regarding the third company, which is Aragon. On 1st April 2012, 40 million shares in Aragon. Oh, out of how many shares? Out of 100. That means Aragon is a what? Associate. What am I going to do in exam? I will open everything. Don't forget, we don't consolidate associates because we don't have control. We only show investment in associates. With these two information, I will now open everything. As at 30th September, 30th, (2012). No current assets, PPE. $358 plus 240. I will not consolidate investment in Salvador. $245 plus 0. Next, order. That means other investment, 45 plus 0. Then I will say investment in associates. Which is the Aragon. Immediately after that, I will write the goodwill and then leave 2-line space. I will say goodwill. After the goodwill, I will leave 2-line space. I will go to the current asset. Why? Because of those things that can come there. In the current assets, what is there? We have inventory. Inventory of the parents. Which is 130 plus 80. Trade receivable. of the parents. 142 plus 97. Bank. Zero plus 4. Total assets. Next, equities and liability. Share capital. We have the share premium. Revaluation. Retained earning. After retained earning, my NCI. Then after the NCI, no current liability. No, oh, we have 8% loan notes. Does not give me current liability as a lump sum. 8% loan notes. We have 0 plus 50. Then deferred tax. $45 plus 0. Then current liability. Trade payable. One 18 plus 141. Bank overdraft. $12 plus 0. The next. Current tax payable. $50 plus 0. Now, after doing this, what will allow me to balance these accounts? I will now open it. What are those things to open that will enable me to balance the accounts? Shows us the group structure. After I've done this, I need to earn some mark. Also, group structure. Adjusted. Retained earnings of subsidiary. I will draw as per statement of financial position. As per SOFP. What was in the retained earnings? Let's quickly check and post. As per statement of financial position, the retained earnings is 60. Then I need to determine the net assets. Determination. Net assets of subsidiary. I will leave enough space. Exam. If I've been practicing, I know the space to leave. For the good way, I'll write the formula. Cost of investment. Add NCI. purchase consideration, net assets at the date of acquisition, then goodwill. Then, after that is done, I'll go to the retain any of the parents. I need retain. Retain any of the parents. That is the consolidated retain as per SOFP. I need NCI. NCI, date of acquisition, then investment in associate. Course. That is what I will open in exam. With this, I will still get something for doing this. There is no way they will not give me something. Let me do it at 50%. There is no way you will not give me something for doing this. But that is not the ultimate. It is that it will enable me to post as I read a post. So we'll now start reading and be posting. We'll now start reading and be posting. Let's just start reading now. The question says, let's open another one for the calculation. Let me take this back to 100. For my workings, people always ask me all those ones. They are sub-solution. We'll now start. The question says, Hydra is a public listed company acquired the following investment. On 1st October 2011, 72 million shares in Salvador, date of acquisition, 1st October 2011. When are we consolidate 30th September 2012? How many years? 1 year. He acquired 72 million shares in Salvador. It's okay. What is the total numbers of shares? Because the values of shares all over nominal value. I'll go to the question. What is the values of shares in Salvador? 120. With a nominal value of €1 to give me 120. He only acquired 72 million. 72 over 120 times 100. I think that is 60%. Let me try. 72 over 120 times 100. How many percent does he acquired? Please, bring a calculator. Let us do it together, please. How many shares does he acquire?
60%, sir.
60%. Thank you, my sister. I will pause. I have gotten this. I will pause to increase my mark. Parents, 60%. Parents, 60%. NCR, Good. I've known for the acquisition is for 1 year. Okay. Next year, how does he pay and what was the retained earning? Okay. Let's see. For immediate cash payment of 195, either agree to pay further consideration on 30/7/2012 of 49 million. If the post-acquisition profit of Salvador exceed an agreed figure, contingent. First of all, let us get the question very well. Say it's going to pay a cash payment. How can we acquire a subsidiary? Subsidiary can be acquired through 5 means. So that we pay cash, share consideration, defer consideration, contingent consideration, loan notes. These are the 5 ways to acquire. According to this question, said it's going to pay immediate cash payment of 195. Then, and a further consideration if the post-acquisition profits exceed an agreed figure, a further consideration. And they said it will pay additional 49 million if it exceeds an agreed figure. The figure was not mentioned. Okay. According to the question, 49 million. If the post-acquisition profit of Salvador exceeds an agreed figure at that day, ADA has not accounted for this deferred payment as it did not believe it will be paid. However, Salvador profit now exceed the agreed amount. Ignore discount. He has not recorded 2 costs of investment. One is cash payments of 195, which it has been recorded. How do I know it has been recorded? He used 2 costs of investment. He said he has not recorded deferred consideration. That means he has recorded the cash payments and the contingent consideration. For the contingent consideration, how do I know it's a contingent consideration of 49 in exam? How can I establish in a question that is a contingent consideration? There must be condition. That is the first thing. 1, condition. If you exceed an agreed figure. 2, after I've known the condition, what is the fair value? 2, what is the fair value of the contingent consideration or fair value of the arrangement? These are the 2 words they use. What is the fair value of this contingent consideration? What is the fair value of this arrangement? That is the 2 words you first of all look out for. Then what happened at the reporting date? Does it meet target? 3 things can happen. 3 things. I will reassess. What happened at the reporting date? 3 things can happen. What are the 3 things? It can either meet targets. Meet targets. Below targets. Exceed targets. These are the 3 ways they can test me. The first thing is there must be a condition. No doubt. What is the fair value of the contingent consideration or the fair value of the arrangement? Let's read the question again to get what? Does it meet target, below target, or exceed target? Based on what we have done, look at the question. Oya, tell me. Said, either agree to pay further consideration on 30th September 2012 at the reporting date of 49 million. If the post-acquisition profits of Salvador exceed an agreed figure, there's a clause, condition, if, good, contingent. Either has not account for these deferred payments, as you do not believe it will be paid. However, total profit has not exceed the agreed amount. Based on what you have read now, is there a condition? Yes. Exceed an agreed figure. Is there a condition? Yes. There is a condition. The first one. Exceed an agreed figure. There is a condition. There is a condition. It says exceed agreed figure. What is the fair value of the contingent consideration? 49. Now, where does it now fall into out of these three? That is our question. Does it meet targets? Does it below target? Does it exceed target? Who can tell me where does it fall into?
It meets target, sir.
Yeah. Are you sure? Do you agree, class? Do you agree with him? With her? He said meet target. That is meet target. My sister, why do you say it meet target? My sister, why do you say it meet target?
Sir, because the condition is that the profit should exceed an agreed amount. And then the question told us that they exceeded an agreed amount. So,
okay. I agree with you, it's meet target. But you interpret very well. So say exceed target. Let's leave that scenario. If I told you that if you pass all your paper, I'm going to give you 100,000 naira. You have not written the exam. Is there a condition? Yes. It's contingent. What is the fair value? 100,000. You pass all your paper, meet targets. Cost of investments, debits, 100,000. My own liability, if I'm paying that 1 year, credit liability, I make provision. Below target, you fail before, you only pass case study because you yourself is a case study. I will only pay you 30,000. The question will tell us. Cost of investment, initial promise, debit, 100,000. Retain any of the parents will be credited with 70,000. Why? Because the liability is 30,000. The third one, exceed targets. There's a best student in SFU. Na she, Abina. Best student in Avastas. Best student in SFA, my head swell up. Yeah, my head must swell up. Instead of paying 100,000, I'll pay you 150. But initial promise must go to the cost of investment, 100,000. The return of the parent will now be further debits by 50,000. The liability will be credit. But if the question did not tell me whether meet target or exceed target, it is silent, like the one they tested in 2020. I will assume it is meet targets. It does not tell me. You only give me these two conditions, condition and the fair value. It does not tell me. I will assume it is meet targets. But this one, it is meet targets. It does not even promise additional money again, even though he has exceeded an agreed figure. If he says, oh, he has now exceeded an agreed figure, he's going to pay 50 instead of 49, or additional 1 million. And see targets. And they say it has not been recorded. Cost of investments. The contingent consideration, not recorded. Cost of investments. Debit for the contingent, 49. My liability credit, 49. That's all. Because why? It has not been recorded. Not recorded. Therefore, the cash, which has been recorded, what do I do to the cash? It has been recorded. Cash payment, recorded. Investments. Cost of investment, 145. Cost of investment debit. I have sent all the costs of investment. When it is recorded, not recorded, recorded, not recorded, have sent it to the platform. If it is not recorded, know the accounting entry associated with that cost of investment and you post. That is it. Any question for me? Any question for me? What do I do next? I'll just go and post. Cash recorded. I will remove from the investments. Oh, 145. Then go to the goodwill calculation. For the goodwill calculation, 145. Plus the contingent not recorded, 49. The provision for the contingent consideration plus 49. Credits. That's all. That is all. That is all.
So,
Good. I'm listening.
So previously, we don't record investment in subsidiary. So why do we record this one? Is it because of the contingent consideration or
We don't
because
record
it
well.
has
Let's correct the assumption from the beginning. We said we don't record. Says who? Go to the one we do the share consideration. It has not been recorded. We record. Why would we not record when it has not recorded? Majority of what we have done is that it has been recorded, which is cash. I will just credit investment and debit cost of investment. We start with cash recorded. We are moving higher. That is why I send it to the platform. Different costs of investment. When it is recorded, not recorded. If it is different consideration, oh, we even did PEP. PEP is a different consideration and share consideration. And the two costs of investment was not recorded. We record. So, we record. It depends on what the question wants from us. But remember, recorded, not recorded. Recorded, not recorded is a language of group accounts, which you must know very well. How do I know it is recorded? When the question is silent. If you go to the next question, CAT, about 4 costs of investment, and all of the 4 has been recorded. So, do you still want to ask questions based on what I've explained now? Or are you clear? Or you want to reframe the question? Let's go ahead. Oh, yeah. My sister, I'm waiting for you. Or should
No,
I?
I'm okay, sir.
Okay.
Yes, sir, I can proceed.
Okay. That is that. The next thing. Somebody also accepted a 50 million, 8% loan note from Hydra as at the date of acquisition. Loan. People used to miss this loan. Let me go back over it again. This loan as cost of investments. Loan, intergroup loan, 2 things. Intergroup loan and loan as a cost of investment. 2 things. Loan as a cost of investment. Loan as cost of investments. And intergroup loan. These are 2 things. Intergroup loan must be eliminated. This must be part of the cost of investment, which can come in 2 ways. 1, share as basis for the loan. The question will tell you, for every 500 shares acquired, it will issue 100 naira 7% loan notes. That is loan as cost of investment. I beg, no go do mistake. It will tell you it's part of the cost of investment. Go to, is it 2021 or 2022? Investment in associate question. One of the simplest questions I can ever test it. 2021. It's a loan, intergroup loan. So then miss it with loan as a cost of investment. Then the next thing. They will tell you from the question, total cost of investment is 900. They will not tell you that this 900, 600 is cash. 600 out of the 900. The remaining 300 loan at certain percentage, let's say 8%, is going to be part of the cost of investment. Aside these two, my brothers and sisters, aside these two, all intergroup loan must be eliminated. Aside these two, go and check. These are the only two ways loan notes can come in exam as cost of investment. You cannot give yourself loan to a single entity. Either as a way of debenture, preferred shares, loan notes. We are still coming to preferred shares before you enter this exam. Because I'm still going to bear Mr. Wasi because of those one we have missed. He has gone far to allow me to use the 2 days. What do I do to intergroup loan? Loan investment. Credit. Loan liability. I will debit. That's all. I will eliminate. We don't have time. Let us go through the interest. The interest he has paid in call. How do we, when we get to POA, or go and look at my solution in IDAN question, there's a loan. Big bottle, loan in form of debenture. All this you can see. You say you have 50% loan note. Cannot give yourself loan. It must be eliminated. I'll go to the question. Said he gave me 50. I will eliminate the loan by saying loan investments. Loan investments. Credit. Minus 50. Go to loan liability. Because one will record it as investment, you record as liability. Oh, 8% loan note. Straight. Salvador record it as liability. The parents, which is either record it as an investment, it must be eliminated. Any question? In the absence of no question, let's proceed. On 1st of April 2012, date of acquisition, 1st of April. Date of acquisition. The date you acquire. The date of acquisition. 1st April 2012. When I will consolidate 30th of September for the associate. So 1st of April 2012. And we are to consolidate in 30th September 2012. This is not a year. From April to 30th of September. April, May, June, July, August, September, 6 months. This is 6-month account. 6 months. 6-month account. What happened? 6 months. In our go by way of a share estate, don't forget, He acquired 40 million shares. We have determined 40 over 100. But over 100 times 100, he has 40% investment. How does he pay for the 40%? It's a share exchange. Don't forget, all the cost of investment we use for subsidiary, we can also use it for associates. The only difference is that instead of saying parent over subsidiary, we say parent over associate, share consideration. In a share exchange of 2 shares in Hydra, for each acquired shares in Aragon, oh, don't forget, it must be parent over subsidiary. But we are not talking about subsidiary, we are talking about associates. We say 2 shares in parent over 1 shares in Aragon times how many shares does he acquire? 40 million. This will give me 80. 2 times 40 will give me 80. I will ask the question. It must be issued at the market price per share of the parent. Unless the market price per share of the parent cannot be determined, that of the subsidiary will not be used. But the parent will still have the premium. The stock market price value of other shares at the date of acquisition, at the date of the share exchange, was 290 kobo. Shares Aragon has not yet recorded the acquisition of the investment in Aragon. He has not recorded. I know the cost of investments. Market price per shares is 290 kobo. Cost of investment to be debit 80 times. 80 times 290 kobo, equity shares to be credit. 80 times 1 naira. I see create a premium? Yes. Share premium. 2 naira 50 kobo minus 1 naira times 80. That's all. This will give me 80. 80 times 2 naira 50 kobo. Oh, yeah, help me with calculator, please. Help me with calculation. God will bless you. Oh, yeah. $80 times 2 naira 50 kobo. Please, on my knee. What is the figure?
200.
200.
200.
Share premium 120. It has not been recorded. I will go to the question. I post. It has not been recorded. Cost of investment in associates. $200. Equity shares. Wait, let me hold the line. Cost of investment in associate 200. Don't forget we have determined the percentage to be 40. I would say equity shares. What is the share capital of the parent? Go to the question. Let's pick the share capital of the parent. It's 400. Plus credit 80. What is the share premium of the parent? 40. plus 120. Have record. Don't forget, all the investment we use to acquire subsidiary can be used to acquire associate, can be used to acquire simple investments. That's all. All those information is go. I'll just go to additional information. Additional information 1. A fair value adjustment and evaluations. Good. Don't forget, associate is 40%. Oppose associate. Other accounting policy for land and building is that they should be carried at fair value. The fair value of Salvador land at the date of acquisition was 20 million in excess of the carrying value. 20 million in excess. 20 million in excess. Revaluation surplus. Land. I'll go to the debits. I'll go to the reserve. Revaluation surplus. I say items. DOA, DOC, post. I'll go and pick the shares. What is the share capital of subsidiaries? 120. 120. Does he have premium? Yes. Share premium. The way I pick the share capital? 50. Retain any you have not given me. Revaluation surplus on land. How much is the figure for the land with the value? 20. Next. In excess of the carrying value. By 30 September 2012, the excess has increased further by 5. I'll just come. The 20 plus 5, DOC is 25. To give me post of 5. I'll go to the additional information. I'll go to my financial statement. No story. We have done this before. You have increased by 5. Plus 5. That's all. That is all. That is all. No story. Salvador building did not require any fair value adjustments. But the fair value of Hydra owned land and building at Atwesa was 12 billion in excess of the carrying amount of the carrying value in above financial statements. In the above statement of financial position. 12 billion, which person? Hydra. Revaluation surplus on Hydra. Where is Hydra? Parents. PPE plus 12. I will now go to Hydra. I will now go to subsidiary. Who revalue? Parents. What was your revaluation account initially? He has 15. Plus 12, we have revalued further by 12. It will not go to subsidiary because Hydra is one revalue. I will debit the PPE and credit reserve of the parents. That is it. Next. And the fair value of Salvador plant at the date of acquisition was 20 million in excess of the carrying value. Plant now. And now the remaining 4 years, straight line depreciation is used. Good. 4 years. 20 million, plant now. Revaluation surplus on plant. PPE, debit, plus 20. I will go to the reserve. Go to the reserve. Valuation surplus on plants. 20. There will be depreciation now. Definitely. I need depreciation. He has said the useful life of the asset. Useful life of the asset is 4 years. So depreciation. The surplus of 20 divided 4 times from the date of acquisition to date we are consolidating 1. This will give me 5. Zanet. 20 divided by 4, 5. What do I do? I'll say PPE. Credit minus 1. Adjusted. Retain of subsidiaries. Debit. That's all. That is all. I'll just go to the question. Depreciation. Minus 5. Adjusted retain. Depreciation. That's all. That is all. Additional information. 3. At the date of acquisition, Salvador had unrelieved tax losses. Anytime you hear unrelieved tax losses, what is your duty? Uncommon adjustments. Unrelieved tax losses. What is your duty? Unrelieved. Or they say unutilized. Any other way. Unutilized. Some will say unutilized. Some will say unrelieved. The same thing. Tax losses of the subsidiary. Subsidiary cannot make profit to utilize the losses, but parents can make. It's one of the reasons why a parent acquires subsidiary. One of the reasons to utilize the loss of the subsidiary against the profit of the parents, because we are preparing one single account. In exam, what is my own duty? I will get the losses, the tax losses, and the tax rates, which the question will give to me. Uncommon. I can have not tested it before. Unutilized tax losses. It has not been tested. But in case they test, what is my duty? I will go to the question. What is the tax losses? It will now give me different tax assets. How much is the tax losses? Let's go and check. Date of acquisitions. Unrelieved tax losses of 40 million. I will ask the question, what is the tax rate? They give me tax rate of 25%. In case you are not giving, I will assume a tax rate of 30%. Different tax assets now. And I say 40 times 0.25 to give me different tax assets. 40 times 0.25, what does it give us? I think that is 10. Yes, that's 10. What do I do to the 10? What am I going to do to the 10? I will say deferred tax assets. Deferred tax assets. I will debit. It's an asset. Deferred tax assets. Deferred tax debit. 10. My reserve. Credit. It will increase the reserve of the subsidiary. But we have alternative, but like this one. I don't value the alternative. To net it off against liability. By debiting deferred tax liability and credit, if I debit deferred tax, I will remove from the deferred tax liability. But I like this way because in like others with years 12, we must throw it. That is the first thing. The second one is saying you must net it off. You can net it off if certain criteria is met. Deferred tax asset and deferred tax asset must be shown separately. One in the non-current liability, the other one in the current, non-current asset and current liability. But you see, I still go further and say it can be net off against each other. So certain condition is met. Instead of saying that static condition here, I will just open my deferred tax assets of 10 and the reserve of 10. So I'll pose. Any question for me, please? I am with you. Thank God the network is back and better. Thank God for that. And the system is stable. So, deferred tax assets. Deferred tax assets. 10. I'll go to the financial statement. That is why we said after your goodwill, leave 2 line space. Deferred tax. Of 10. That's all. That is all. We go to the next question. Any question for me? Next question. Next additional information. The retail earnings of Salvador and Aragon as of 1st October report in the financial statement were 20 and 200 as at the beginning of the year, 1st October. For the subsidiary, Salvador and Aragon, subsidiary is 20. Retail earnings as at the date of acquisition. It is not during the year, so you must give me retail earnings. Say 20. For the associate, he has given me the 200. How we share profit. Investment in associates. Don't forget, I will share profit. I will go to the statement of financial position. As at acquisition, say share profit. Associates. What was the retail earning of associates as at 300? 300 minus 200 times 6/12 because we only give it for 6 months. I only acquire for 6 months. What is your profit? I will debit investment in associates. I will credit return of the parent. So 100 times 6/12 times the percentage of associates for 40%. Oh yeah, 100 times 6/12, that will give us 50. Times 0.4, what is the figure?
20.
20. The second leg. I will debit investment in associates and credit retain any of the parents. We now say, okay, share of associates profits. That's all. As per SOFP, what is the retain earning of the parents? 240. 240. I'll go to the additional information next. Impairment test on 30th September 2012 show that consolidated goodwill should be written down by 20 million. Added apply IFRS 3 business combination acquisition of Salvador. If investment in Alagoas has not suffered any impairment, that is the end of the question. How do we value NCI? You did not give me any clue on fair value. The question is silent. Share proportionate. But you are silent. You did not give me market price per share of subsidiary. You did not give me the fair value of NCI. You did not give me goodwill attributed to NCI. You did not give me the fair value of the whole subsidiary. It means this question is silent. When it is silent, the goodwill is a share proportionate, and the goodwill belongs to parent, impairment. I'll pause. I'll go to the goodwill, even though I've not known the figure of the goodwill. I will end that mark. It has impaired. The goodwill has impaired. Impairments. $20. That's all. That is all. 145 plus 49. What does it give us? We have another question. Please bring your calculator out. Let's do it together so that we can put another question, please.
$194.
Eh?
194.
See 194. How much is the cash payment? Investment in associates. How much is the cash payment? Do we record the right thing? Let's see. No issue. It's 195. Error? Because it must be eliminate. It's 195. $195. The cash is 195, not 145. Plus plus 49. 195 plus 49.
244.
244. NCI share proportionate. 0.4 times net asset. What is the net asset? 150 plus 50. 150. 150 plus 50 plus 60, 70. No, 120 plus 50 plus 70, 240. NCI now, sure proportionate. 0.4 times 240. 0.4 times 240, 96.
96.
244 plus 96 plus 244, 340. Purchase consideration. I will less the net asset. I will less the net asset at the date of acquisition, which is 240. Then the goodwill is 100. 100 minus 20 give you 80. Goodwill to be reported, 80. I'll go to the statement of financial position. Goodwill to be reported, 80. 80. That's all. Then sure profit, 60 minus 5, 55. I'll bring it down. Return 55, 50, 120. This will give me 35. So post is 40. NCI will collect 40%. %40 of the post. NCI at the date of acquisition, share of post, 0.4 times 40. Then parent will collect share post, 0.6 times 35. 0.6 times 40. 0.6 times 35. 21. That is the end. Zero 0.4 times 40, 16. What is the NCI at the date of acquisition? 96. 96. Stop. 96 plus 16, 112. NCI to be reported. Then 240. This will give me 261. That is the end of the question. We'll move to the next question.
Sir,
Yes?
please, this share of post for the parents return earning, why are we multiplying 35 instead of 40?
Yes,
Because
yes.
the I multiply 40.
Yes. What we have done before. Go to SuperCorp. The first thing we start in this class, I told you. Parents has his own account, revaluation reserve. How can I share? It will balance, but they will subtract mark immediately. Take note of this thing. It's very important to parent has revaluation reserve account. How can I share? I will come here now. Plus 0.6 times 5. He has his own revaluation reserve account. How can you take it to retaining? I say in case he does not have, you will create it. They used to play this prank. Revaluation reserve another component of equity. If you go and share it to retain it, fear or straight. But for NCI, it's only NCI account, only one. Anything that happen to NCI is NCI. Anything I want to share is NCI. I hope it is clear.
Yes, it is. Thank you, sir.
This one will now come here. NCI is 112. Return 261. It's 0.6 times 5, 3. This will give me 30. 160. 480. Non-current liability. 8% loan note. That one will go. Deferred tax 45. Trade payable 118 plus 14 plus 49 181 12 50. That is the end for the equity side. I'll go to this 358 plus 240 plus 25 plus 12 plus 15, 650. That one must be equal to 0. 245 minus 195 minus 50. For other investment, 45. Investment in associates. I'll go and bring it. $220. That is it. 220. Go to associates. Investment in associates. 220. 130 plus 80. 210. 142 plus 97. 239. Bank. 0 plus 4 is 4. I will sum. 650 plus 45 plus 300 plus 20 plus 23 no plus 4. It's giving me 1458. Let me confirm. 1458. Let me confirm it. 48, 480 plus 160 plus 30 plus 2 plus 261 plus 112 plus 45 plus 181 plus 12 plus 50 different figure. Where are people return? Let's see. Please help me sum it too. I'm having different figure here. 400 plus 80. 480. Let me reduce hash points so that I can see everything. Okay. 480 plus 160 plus 30 plus 261 plus 112 plus 45 plus 181 plus 12 plus 50. Let's see. What is happening? I've done the right thing. Okay, I'm coming. Minus 1458. 127. Okay. Is the problem? Let's go to the financials. I'm coming. Maybe I didn't type the financials very well. Let's go to the question. You have done the 80. That is the problem. 650, 45, 80, 220. Different assets. Addition of 118 plus 14 plus 49. Oh, 141, not 14. 118 plus 40. That's where the problem comes. That is the problem. It's 118 plus 141, 114 plus 49, 308. This is 308, not because it must balance. This is 308. It's 141, 114. So when you add it, 480 plus 160 plus 30 plus 261 plus 112 plus 45 plus 308 plus 12 let me add you. Please, let somebody help me add. Is it getting 480 plus 160?
It's 1458, sir. It's correct. 1458.
It's giving us some figure. It's giving us figure here. 1458. That is the end. Let's go to another question. 1458. Let me see. Do I still need to send this or you have said the solution? Do I need to send this?
Yes, sir. We need it.
Okay. Let's go to CAT. CAT PSC. CAT. CAT PSC. CAT PSC. If you read CAT, now, CAT PSC. I think that is question 2, Connie. Okay. CAT. First of all, determine the type of investment you are giving. In this case, say on 1st of April 2018, CAT acquired 80% in DOG. Good. Correct. So DOG is a subsidiary of CAT. I will also go there. To look for information regarding BATs. How many does he have in BATs? If you go down on 1st October 2018, CAT PSC also acquired 40%. 40% is what? Associates. Don't forget, we don't consolidate associates. We only show investment in associates. With this, I cannot do what? Consolidate. By open everything, I will say CATs. Consolidated. When are we preparing the account? I will check on the question. As at 31st of March 2019, I will say consolidated statements of financial position as at 31st March. As 1st March 2019. 31st March. (2019). We don't consolidate associates. Go to the non-current assets. PPE. What is the PPE? 187,500 plus 122,500. Investments in DOG and CATs. In DOG and BATs. What is investment in DOG and BATs? 225,000. Good. I'll say, okay, investments in associates. After that, goodwill. After the goodwill, I leave 2 line space. 2 line space. I go to the what? The current assets. Don't forget, leave 2 line space. I'll say current assets. Current assets. Inventory. Inventory of the parents. 50,000 plus 45,000. Trade receivable. Trade receivable. $32,500 plus 75. Then total assets. Equities and liabilities. Share capital. That one is certain. Share capital. Share premium. Retail earning. NCI. Non-current liability. No current. No current liability. 7% loan notes. $72,500 plus 10,000. Contingent consideration. $21,000. Current liability. Trade payable. $41,500 plus 37,500. Immediately after that, what do I need to balance this account? I will open growth structure. Growth structure. Adjusted. Retail earning. Adjusted retail earning of subsidiary as per SOFP. What was in the retail earning of subsidiary? 87,500. Next, determination of net assets. Of net assets of subsidiaries. Items. DOA, DOC, OS. I need to calculate the goodwill. Say goodwill calculation. Goodwill. Cost of investment. Add NCI. Purchase consideration. Net assets at the date of acquisition. Then the goodwill. Next, I need retain. I need to determine the retain. Of parents. After the retain, we need NCI. NCI, date of acquisition. Then investment in associates. Because you acquire 40%. We don't consolidate associates. Investments in associates. Costs. Good. With this, I have done that. I will go to my sub work. No. Good. I will now start be reading and be posting. Good. Question 6. On 1st April 2018, cat acquired 80% of dog. He acquired 80%. No structure. On 1st April, date of acquisition was April 2018. And we are consolidating 31st of March 2019. 1 year. No problem. In a share exchange of 1 shares in cat for every 2 shares in dog. O, share consideration. Exchange ratio. Share concentration. Exchange ratio, not issue direct. In a share exchange, I'll go to the question. What is my own duty? No problem. But what is the total numbers of shares in subsidiary? Because the values of shares all over nominal value. What is the values of shares? Cat has 40 million shares. Dog, 40 million shares. At a nominal value of 1 naira. So 40 million. 40 million is at 100%. He only acquire 80% of it. It's 0.8 times 40. 0.8 times 40. This will give me 32,000. How does he pay? Say it's the share exchange, which must be parent over subsidiary. According to the question, let us read. According to the question, 1 shares in cat for every 2 shares in dog, 1/2. Parent, 1/2 times 32,000 to give me 16,000. I will ask the question. It must be issued at the market price per shares of the parents. Did they give me the market price per shares of the parents? I'll check. Let's go to the question. Oh, the market price of cat and dog shares at the date of acquisition were 9 naira, 6 naira in my head, in the exam. But why does it give me that of the subsidiary? It means that since here is valued at fair value, I can go and check. I will first of all post that myself. Let's go. How do you value here? Additional information for cat policy to value non-controlling interest at fair value. Okay, that says so. That's why you are giving me the market price per share of subsidiary. Because how do I know it is fair value in exam? 1, market price per share of subsidiary or NCI will be given. 2, fair value of all subsidiary. 3, fair value of NCI. 4, goodwill attributed to NCI. One of these 4 must be there. What's the policy? Which the question has let me know. It is fair value. So what is now my own duty? Very clear. I can calculate the value of NCI. I'll put full stop to this one. I'll go and calculate NCI to end the mark. I've opened the questions. Okay, let me go. So 40,000, 32,000 is to the parent. 8,000 will now be to the NCI at a market price of 6 naira 48. I'll just go to the question straight. NCI, the date of acquisition. Okay, let me do my NCI. NCI, date of acquisition. 8,000. times 48 straight. I'll go to the goodwill. Not to waste time. To end that mark. Let me end that one. Yes. Goodwill. NCI. 48. Which is 40,000 times 0.2. That's all. That one is done. I will now go back. Market price per shares. Before I enter all, I know what I need. Group account is repetition. They've given market price per share 9 naira. Cost of investment to be debit 16,000 times 9 naira. Equity shares to be credit 16,000 times 1 naira to give me 16,000. Has he created a premium? Yes, he has created a premium. Share premium now. Share premium. Oh, that's to be credit 9 naira minus 1 naira times 16,000. Well, we have 16,000 times now. Please help my ministry. Go back here, took you holiday. Help my ministry. Oh, yeah. Help my ministry.
2,000 times 8. 128,000.
16,000 times 9. Which one do you do? Okay, the share premium,
Yes, sir.
128,000. Then 16,000 times 9.
144,000.
144. That's all. I will now ask the question. Has it been? Is your duty to ask, has it been recorded? Let's go. How do I know it is recorded or not? When the question is silent, recorded. Clearly stated is recorded. Through investigation, I will know. In asset. Let's switch. Top PSC return at the date of acquisition we are 82,500. In addition to this, CAT agreed to pay a further amount of 1st April 2019 that was contingent on post-acquisition performance of drug. At acquisition, CAT PSC assessed the fair value of the contingent consideration as 21,000. But at adverse March, it was clear that actual amount to be paid was only 13,500. Ignored discounts. CAT PSC has recorded the share exchange and provided for the he has recorded the two and also provided for the contingent consideration when it has been recorded. My own duty, cost of investment, 144, credit. Our meta. When it has been recorded. When it has been recorded, contingent consideration, and we have not gotten that share consideration. Recorded. Or go to the investments. Cost of investments for the goodwill calculation. 144. You also say contingent consideration. How do I know it's a contingent? There must be condition. How do I know it's a contingent consideration? There must be condition. What is the condition? If you perform, contingent consideration. If you perform contingent condition, which the question says post acquisition performance. So what is the fair value of the contingent consideration? 21,000. The third one, I will reassess. Does it meet target? Reassess. What happened at reporting date? At DOC. Three things can happen on yearly basis and reassess. Three things can happen. First thing, meet target, which the question will tell you. It meets the target. Second one, below target. Third one, exceed target. This is the third 3 ways. This is the 3 ways. This is the 3 ways. And the question, let us go to the question. You say you will pay 21,000. What happened at the reporting period? He said, as at 31st March 28, as at 31st March, it was clear that the actual amount to be paid will only be 13,500 below target. He promised 21,000. But as reporting dates, I can only pay 13,500. It does not meet target. The question will tell you, well, ICANN has tested it 4 times. There was one that they said, I think that is 2017 November. They said differentiate between deferred consideration and contingent consideration. Open check. 5 marks for doing nothing. Next, I'll say cost of investments. Cost of investments. Debit, 21,000. Initial promise. Retain any of the parents will now be credited with the difference. Retain any of the parents. Liability now. But yes, credit. 13,500. 21,000 minus 13,500. That will give me 7,500. But he said he has made provision for the 21,000. He has recorded. First thing, when it has been recorded, of any remove from investments, it has been recorded. So investment will suffer. Investments. I'll go to the cost of investments. For my goodwill calculation. Credit investments plus. He said he has made provision for the 21, he has recorded. I will go there now that you are not supposed to make provision for 21,000. You are supposed to make provision for 13. So I will not debit minus 75 to give me 13,500. I will not credit return of the parents. Very much low. Return of the parents. Oh, contingent as per SWFP. Contingent. Constitution. 75. Or credit his account. Ask me question. Ask me question. We don't know when we are going to finish, but we must finish this question. If it is 1 a.m., we are here together. Nothing to us. Nothing to us.
Hello, sir.
Ask me question.
Hello, sir.
I'm with you. I'm with you, serious. I'm with you,
Okay,
ma'am.
this cost of investments,
Mhm.
you wrote debit. You wrote we are supposed to debit it. Then why are you now minusing it under the investments?
When it is recorded, I will credit that. You have not got
Because
it.
it has been recorded.
The question says, I have recorded it. And said, when it is recorded, what is your own duty? Credit investment, remove it, and debit cost of investment, because you want to use that figure for goodwill calculation. If you don't remove it, it will not balance. It will amount to double posting. He said he has recorded. The problem here is not as well whether I remove or not. The problem here is to identify what to do when it is recorded and when it is not recorded. And what to do when it is recorded is clear. Like it's as clear as water. Very plain. That if it is recorded, credit investment, debit cost of investment. Like the share consideration, it says it's recorded. I will remove it from the investment. I will debit cost of investment. The contingent consideration, it says it's recorded. And he has provided provision for 21. I'll go and remove.
Okay,
Any
sir.
other question? Any other question, my sister? Ask your
Okay,
question.
the other question I want to ask is under this share consideration, this
Mhm.
0.8, where do you get this 0.8, sir?
He said he acquired 80% from the onset. He does not
I
acquire
didn't see it
100%.
in the question.
Eh?
I've been looking for it. I'm not
Go to the
seeing it.
beginning, it's the best thing in the beginning. He said he acquired 80%, the good structure. There's nothing we can do with it if we don't know the good structure. Go at the
I'm not
beginning of the
seeing
question.
where am I, sir? Okay. I went down. I was looking at another place. All right, thank you, sir.
Any other question? Please ask. You must finish your own. Any other question? In the absence of no question, we proceed. We proceed. He has given me return at the date of acquisition to be 82,500. I'll post return as at the date of acquisition, 82,500. I'll go and pick the shares. What is the shares in subsidiary? 40,000. Does he have share premium? I'll check. No, it does not have. Retain as at the date of acquisition says 82,500. That's all. On 1st October 2018, what happened? The group structure, parents, 80%. NCI, 20%. Associates, 40%. On 1st October 2018, 1st October, what happened? CAP PSC purchased, CAP PSC also acquired 40% equity shares in BAT. Good. On which day does it acquire BAT? Investments in BAT. He acquired 40%, but on date of acquisition, 1st October 2018. And we have to consolidate. Date of consolidation, 31st March 2019. Good. 40% shares. But paying £4 cash to acquire shares and issue at par. Okay. The consideration has also been recorded by CAT. The consideration is, he paid, how much does he pay? First one, he said he will pay £4 per shares. Acquire. I will now go to the question. Associate now. What is the total numbers of shares in associates? We'll go. Total numbers of shares in associates. Values of shares. What is the values of shares in associates? Divided by nominal value. Let me go and check. In associates, 25,000. Associate has 25,000. Divided by the nominal value, which is £1. You only acquire 40%. Parents acquire shares now in associates. Next week, I will increase the volume. The complexity of the question will be increased. That's okay. 0.4 times 25,000. What does it give us? Yeah.
10,000.
10,000. Pay £1 per shares. 10,000 shares times 40,000. Has it been recorded? You say yes. According to you, say yes. When it is recorded, my own duty is recorded. Go to the question. Minus investments, 40,000.
Excuse me, sir.
Uh-huh.
So please, when it is not recorded, what is the accounting entry?
Oh, that is what we are posting. We credit investment and we debit cost of investment.
When it is not recorded.
When it is not recorded, you must know the accounting entry. If cash is not recorded, how can we credit cash and debit cost of investments? If share consideration is not recorded, I'll debit cost of investment, credit share capital, credit share premium, because it is not recorded. If deferred consideration is not recorded, I must know the accounting entry that associates with it. Present value will be debited. If finance cost will be debited to the retainer of the parent, and I'll create a liability credit. It is not recorded, which I have sent to your platform in PDF. when it is recorded, not recorded. It's a language of group account. You cannot do any question on group without knowing this thing we are saying. Really important. Because if it is recorded, I did not remove the money here to put it in cost of investment, the thing will troubleshoot. I've used that figure twice, knowing fully well that parents will only prepare his own account, separate account. He bought a subsidiary, he will record it in his book. Failure to record it is okay. It's when will I record for him? It is when I want to consolidate. You want to hack, applying the knowledge of IFRS 3. Any question again? My sister, any question? It is not, even in physical class, recorded. It's a problem. Even in physical class. Recorded, not recorded. Different question. How is it recorded? My sister, any question again? Do you clear about recording or recording now?
Yes, sir. Thank you, sir.
Let's proceed. Good. Now, but tomorrow is holiday. We are not going anywhere. But me, I'm going to lecture from early morning. I will remove. I'll take it to the cost of investment. 40,000. Go to investment. 40,000. It has been recorded. Adibin, this one is not recorded now. I'll go and credit the cash and debit investment in associates. That's why I always use question to do record, no record. It does not only use that cost of investment. It says another one, loan notes. What the loan notes now? Loan notes. For the loan notes, an issue at par, 100 naira, 7% loan notes for every 50 shares acquired. For every 50 shares acquired, what is the shares you acquire? 10,000. For every 50, I will issue 100 naira. That's all. If this has not been recorded now, what is my own duty? What is the figure? Yeah. What is the figure? Please give me the figure, please.
20,000.
20,000. I'll say cost of investment in associates. Because it's associates. Debit 20,000. If it is not recorded now, not recorded. If not recorded, I'm going to run it to current liability credit. 20,000. This is it. He said it has been recorded. Now, record. Yes, recorded. I will now say investments. Remove the money. Credits. Cost of investment in associates. That's all. Adibi, it has not been recorded. The interest element 7% on the loan, because they will collect interest on the loan, 7%. Okay, finance costs. Oh, you say, oh, he has given me 7% for the loan. How much is the loan? 20,000. Pure head. I will debit 0.07 times 20,000. Then cash credits. They said it has been recorded. It does not concern me. He has recorded it. Why do I need to do this again? He said he has posted it. He has taken care of the interest. Why do this again? Not recorded. No, he has recorded it. This is only what I need. Will I be arguing with the question? Why do you record it? Why do you do my job? I'll go to the question. No problem. You have recorded. I'll go and remove the 20,000. Investments. Investments. I'll go to cost of investments. In associates. Forty plus 20. 60,000. That's what. He has given me the retaining. I will share profits. On which day does he give me retaining? The retaining at the date of acquisition is 75,000. I will go to the SFP. What was the retaining? I will share profits. One of them. I'll say share profits. One of five. Minus 75,000. That's all. Am I going to prorate? No. You have said at the date of acquisition. That was the retaining. You have said at the date of acquisition. That was the retaining. It may look come to pass. I will not prorate because he has said as at the date of, not as at the beginning of the year. This was the retaining. Oh yeah, second leg. 105 minus 75,000 times 0.4. Oh yeah. 105 minus 75,000 times 0.4.
12,000.
What do you call it?
12,000.
12,000. Second leg. Sure, investment in associate, I will debit. Retain of the parent. You say share of associates profits. 12,000. That's all. That is all. As per SOFP, let me check the return of the parents. 136,000.
So this, so
My
this
sister,
share
you
of
want to ask a
profit,
question?
the share of profit, I'm getting a different figure.
105 minus 75 times 40%.
Yeah, 105,000 minus 75 or 75.
75,000. You not say 75. You are 75. The question says 75. Let me check. 75,000.
Okay, sir.
You are 75. 75. Is it clear now?
Yes, sir, it is. Thank you.
It will thank you. I will go to additional information. At the date of acquisition, the fair value of dog property, plant, and equipment equal to the carrying amount with the exception of dog plant, which had a fair value of 10,000 above the carrying value, the valuation surplus. Above. Net assets. Valuation surplus on PPE. Plants. 10,000. Go to PPE. Plus 10,000. Is there any useful life of the assets as a date of acquisition? The plan had a remaining useful life of 20 years as a date. Is either you give me depreciation or you give me the useful life of the assets. Depreciation. No issue. Depreciation. 10,000 divided by 20 times DOA to DOC. Oh, yeah. What does it give us? So that's this 500. Yes, 500. PPE. Credit. Depreciation. Next. General information 2. At the date of acquisition, dog had a brand name which had a fair value of 250 below now, the carrying value. Shortly after the acquisition, car director used an independent professional experts to value the brand, and the experts found that the brand has no recoverable amount, and dog wrote it off. Brand name at the date of acquisition, which has been written off, but it's lower. You will not see it in the book again because it has been written off. It has been written off. What is your own duty? Date of acquisition. Branding. It has been written off, but it's lower. As a date of acquisition, CSs, it's shortly after acquisition they write it off. At DOC, nothing. You will see enter book. Intangible assets, 3 ways. Brand name and date of acquisition and open account. We have done that. Go to PEP. Brand name and date of acquisition written off. That's what we are doing. The third one, brand name not recognized in line with IAS 38 and subsidiary as amortized before the. That is the third one we are still going to do. That's only 3 ways it can be tested. I can test this one too. That is what we will do. The exceeds at acquisition, it will lower. But shortly after acquisition, they've written it off. You will not see it in the financial statement again. But you make use of it as acquisition. You remove the light assets, it was lower. Then shortly after acquisition, you write it off. Any question before we proceed? Next. On 31st March 2019, current account withdraw was like 17,000 debits. Good. This is not agree with equivalent balance in dog book due to some goods in transit invoice at 9,000 that were sent by CAT on 30th September, 30th March 2019, but has not received by DOC until after the end. That sold all these goods at a markup of 25%. First and foremost, trade receivable, trade payable consideration. Inventory in transit. What is the total receivable? Said the total receivable is 17,000. CAT said subsidiary is 87,000. It's different from the subsidiary book, which is due to it does not know that inventory is in transit. What do I do in exam? You cannot always show that you're a single entity. Show receivable. Show receivable. 17,000 minus. You cannot always show that. Inventory is in transit. Or debit inventory that is in transit. How much is the inventory that is in transit? 9,000. I'll go to trade payable. 70,000 minus 9,000. That is 8,000. Trade payable account minus. That is it. That is it. Is he put a markup, unrealized profit on inventory? Markup of 20, how many percent? 25%. On the goods in transit, he has had profit to it. Unrealized profit on inventory. Total sales. $9,000 on transit. Unsold, 9,000. Markup, 25%. Unrealized profit on inventory now. $25 over 125 times 9,000. What is the unrealized profit on inventory? Give me the figure. Seller account debits. Consolidated inventory. What is the figure?
1,800.
1,800. Who is the seller? CAT is the seller, which is the parent. Why do you sell and make profit from your subsidiary? I will go to his account. Before going there, inventory, credit. Now go to the account. You know what to do. Unrealized profit on inventory. For CAT policies to value not controlling interest, we have done that. Impairment test said we are carried out on 31st March, which concluded that investment in BAT were impaired by 20% and goodwill impaired by 19%. Oh, if goodwill is impaired, it is fair value impairment now. 0.8 times 19,000. We go to the parents because it is fair value. The goodwill has been impaired by 19. Oh, yeah. What is the figure? NCI impairments. 0.2 times 19,000. Is 0.8 times 19.
15,200.
We don't have to collect out of the 19. Oh, yeah.
$3,800.
But 20% of investment in associates. Or wherever go and get the carrying amount of the investment and you pay back the carrying amount. $72,000. Impairment now, 20%. 0.2 times 72,000. 0.2 times 72,000. It's 0.2 times 72. What does it give us?
14,400.
14,400. That is all. Oh, that's okay. 72. $7,600. I'll go here. Impairment in associates. $14,400. That is it, my sister. That's the end. We cannot consolidate. Go to the question. We are done now. Our cost of investments, 144,000 plus 21,000, 165,000 plus 48, 213. Then I need to less the net assets at the date of acquisition, which is here. Net assets, 40,000. plus 82,500 plus 10,000 minus 25, 130. Please confirm the figure. 130.
It's correct, sir.
I will now remove it. Net assets. 130. To give me the goodwill. Minus 2,300. 83. Impairment now. 19,000. 3,000 minus 64. That's all. Goodwill and DOC. Goodwill to be reported. $64,000. Next, adjusted retain 87,000. I'll bring it down. 87, 40,000, 10,000. This one will give me 25. 87 minus 7,000 minus 82,500. 45. Total goes to share 45 plus 25. 7,000. Share profits. NCI. Share profits. $0.2 times 7,000. 48,000 minus 38 plus 14. 45. 600. I'll go to the return. 80% of 7,000. Share profit. 0.8 times 7,000. 0.8 times 56. 56. 136,000 plus 75 plus 12,000 minus 18 minus 15, 200 minus 14, 200 plus 56, 129,700. Please help me confirm the figure. 129,700. 129,700. 129,700. 45,600. NCI 45,600. The parent is everything 127, 129, 700. Please let me check. Share capital of the parents. This will give me 2,500. Please, what is the share capital of the parents? What is the share premium? I remember people have slept. Start with me. I really appreciate it.
I'm not, I'm using my phone, so I'm not with the question.
This will give us 35, 41, 500 plus 37, 500 minus 8,000, 71,000. Let me go and check the share capital. You stand by me. I really appreciate it. We have been having network challenges like 3 weeks now. Could not do anything. Thank God. Okay. I'm looking for the share capital. Yes, I've seen it. 125,000. Share capital is 125,000. 125,000. And the share premium is 99,000. That is for the equity and ability. Let's go to the PPE. 18. So 500 plus 122, 500 plus 10,000 319.
319,500.
Investment in dog 225,000 minus 144. It must be zero because it has specified. Minus 21,000 minus 40,000 minus 20,000, zero. Because it's a specific instruction. Investment in associates. What is the figure? It is 7,600.
57,600.
7,600. The goodwill we have gotten, how much is the goodwill?
64,000.
64. With this inventory, we have 50,000 plus 45,000 plus 9,000 minus 1,800.
102,200.
200. Then trade receivable 32,500 plus 75 minus 17,000.
23,000.
That's all. Let's minimize so that we can get That's okay. 319,500 plus 64,000 plus 57,600 plus. We have 64 too. Example. Investment in associates. Oh, this one should be cancelled. Would be 64. Okay, plus 102, 200 plus 23,000 is giving me 566, 300. Let's do the second one. 566, 300. We have 125,000 plus 99 plus 129,700. 129,700 plus 45,600 plus 13,500. No, I've missed figure.
It's
124.
566 300.
Is it Ali?
Yes, sir.
Where's the figure? Thank you.
566 300.
566. Good. 566. 100. That is it. Ladies and gentlemen, I don't know whether we have any man because the voice of the woman I'm hearing, I don't know. Any question for me before we call it next week?
I don't have any question for now, sir. If I have, I will chat you up, sir.
No problem. The absence of no question.
Hello, sir. Good evening, sir. Sir, are we going to solve any other question in here in this topic?
We are just starting. Go to the question.
Okay, that's nice.
I said next week. It's just that we have missed 3 weeks. It's paining me. I have to go and buy modern. I have Glow now, net MTN.
Okay, sir.
Now, so the next one will increase the complexity. I've sent the question automatic.
All right.
And this you will see when we get to next week.
That makes sense.
Are you just joining the class? Because you have not been talking.
I've been on and on, Jar. I've been on and off, Jerry. Had a lot to do, but that's not an excuse. That's on my side.
And
I've been following, but not completely present in class. So it's okay, sir.
So you can go and rewatch now.
Well, sure, I will definitely do. I'll definitely do within the weekend.
That is why this thing is okay.
Yes, I will definitely do, sir. All right, sir. Thank you so much, sir.
You're welcome.